is another interesting edition of the Market Review where we discuss key developments in the financial and capital market as it affects the economy. Today, we'll be focusing on the Roadmap 2023, mainstreaming the capital markets into Nigeria's economic agenda. And my guest is Professor Uche Uwaleke, now a regular guest on our program, the president of the Association of Capital Market Academics in Nigeria. It's nice to have you, Prof, after a while. Well, thanks for always being there when we try to reach out to you.
Yeah, thank you so much. Thank you so much, Abasi. It's indeed my pleasure.
Yes, thank you. Before we begin the conversation, viewers, let us give you a wrap of key developments that occurred in the Nigerian capital market last week. The Chief Executive Officer of Nigeria Exchange Limited, Mr. Temi Popola, re-emphasized the capacity of the NGX in advancing sustainable development and combat climate change by fostering the growth of long-term sustainable finance. Mr. Popola made these statements celebrating the World Environment Day last week, said sustainable exchange championing Africa's growth is what NGX has been doing and has a long-standing commitment to fostering the growth of long-term sustainable finance in Nigeria and across Africa. Also last week, Access Holdings PLC, trading as Access Corporation, one of the quoted companies on the Nigeria Exchange, as wholly owned subsidiary of Access Bank PLC, has entered into a binding agreement with Kenyan-based Centum Investment PLC for the acquisition of the entire 83.4% equity stake held by Centum in Sidian Bank Limited. Quite a big story from last week. If you're joining us, it's the Market Review, and my guest is Professor Uche Uwaleke, President of the Association of Capital Markets Academics in Nigeria, and our conversation today is on Roadmap 2023, mainstreaming the Nigerian capital markets in the economic agenda. As you all know, we've seen the emergence of various presidential candidates, but what is the role of the capital market in the agendas that will be brought out as the build-up to the general election takes shape? So, Prof, let's just begin with your perspective on the emergence of the various presidential candidates who seem to have a pro-capital market disposition. We've seen some of them, the All Progressive Congress candidates, the People's Democratic Party candidate particularly, and even the Labour Party candidate. Those three have this penchant for public-private partnership engagement, and that definitely dovetails into leveraging the markets. What does this bring to the fore? Because you have been at the forefront of saying the capital market needs to be at the fore of driving our economic agenda.
Yes, you're very correct. As a matter of fact, I told some people only yesterday that head or tail, the economy will be better off. What I mean by that is whoever emerges eventually as the president of this country come 2023, especially among the three you mentioned, we are bound to see improvements in the economy. And of course, we expect that that will trickle down to the markets. Whether it is Asiwaju Bola Tinubu of the APC, whether it is Alhaji Atiku Abubakar of the PDP, or even Peter Obi of the Labour Party, these three are, as you rightly noted, they are pro-market, they are market-friendly. I'm pretty sure that the markets will receive a boost if any of them emerges. Particularly, Peter Obi of the Labour Party, who has this private sector disposition, and who we also know used to be the chairman of the Securities and Exchange Commission. So I think Peter Obi understands the challenges of the market and what needs to be done, among the three. But as I said earlier on, the three of them are good. If you look at their programs so far, what is already in the public domain. I've seen the that of Asiwaju Bola Ahmed Tinubu, what has so far been released by his media team, titled My Vision. I've also seen My Covenant, that of Alhaji Atiku Abubakar. Now, if you look at the two hold a lot of promise for this country. All of them, talk about the issue of security, which of course, is critical. We can't talk about market growth without security. Market cannot grow in the face of insecurity. So the two of them recognize, or the three all the parties recognize that a major problem we have in this country is insecurity, and they are addressing that in their manifesto, they're addressing that in their program. I also want to single out that Alhaji Atiku Abubakar, I didn't see that in that of Asiwaju Bola Ahmed Tinubu. He talked about national unity, fostering national unity, because that is also critical. That's the starting point. You need to have, a united country. He said he's going to do that through collaboration. That will go along with improving confidence in Nigeria, in the economy, improving confidence in the market, and you need that kind of environment to even talk about attracting investors, to the market. So, in terms of security, both of them, especially Ahmed Tinubu and Atiku, are talking about decentralizing the police. My understanding of what Atiku Abubakar said was he intends to devolve internal security to the concurrent list. That's another way of saying, decentralizing the police. Asiwaju was very clear about that. He intends to decentralize the police. So on the issue of security, that is something that both of them, all the parties are taking seriously, and it's a good development for the economy and for the market. Now, on the economy itself, the APC candidate hopes to grow the economy by as much as 12%, GDP growth rate of 12%, with the next over the next 4 years. That's beginning 2023 on the average. That may appear ambitious, given that even the National Development Plan that we have, talks about just 4.6% GDP growth, between now and 2025. So the APC candidate is ambitious about, growing the economy. Of course, if that can be attained, you can imagine having a GDP growth of 12%. What it portends for the economy, what it portends for the market, what it portends for jobs, and so on and so forth. Atiku Abubakar, in my view, appears to be a little more conservative about growth. His document is talking about having a respectable, I want to quote him, a respectable economic growth, over the period. And then what he means by respectable is economic growth that is above the sub-Saharan African average. So again, that is, as I said, a lot more conservative. But again, if you look at the two programs that are already out, APC and PDP, you also realize that they tend towards market forces. Okay, the APC was talking about in the oil sector, for example, it was clear that he was going to remove fuel subsidy. Okay, the Atiku Abubakar was also very clear about allowing the market to determine prices. Okay, and that's not just in the oil sector, but Atiku Abubakar was also talking about even in the forex market, because he said that he hopes that monetary policy will be used to bring about low interest rate environments, low inflation rates, and stable naira. Okay, so of course we know that when all these things happen, it is the market that will benefit. It's a situation in which, for example, the private sector is very much involved. Both of them are talking about involving the private sector, public-private partnerships, particularly in building infrastructure. Again, you expect the market to be of benefit. The program of the PDP is a lot more elaborate on infrastructure development. Improving the stock of infrastructure. PDP was talking about growing the stock of infrastructure from the current 35% to GDP to between 50 to 70% of GDP. So you can imagine if stock of infrastructure is ramped up, to that level. As we speak, Nigeria has one of the lowest stock of infrastructure to GDP in Africa, and South Africa has about the highest at about 85%. So if the administration of Atiku Abubakar is able to push it to 60% as being projected, that will go a long way in enhancing the environment for business. That will go a long way in attracting investment. That will go a long way in, of course, improving participation in our market. Because if you look at the market today, our markets today, whether the capital market or even the money market, a major challenge has always been, the issue of weak infrastructure. Weak infrastructure is not enabling participation. Weak infrastructure is also not allowing businesses to do well, particularly the ones quoted on the exchange. And if the ones quoted on the exchange are constrained by factors such as insufficient power, and so on, it tells ultimately on their bottom lines, and of course on their valuation. So we expect that ramping up infrastructure will improve, the fortunes of companies, and of course put them in a better stead to contribute to the growth of the market and the growth of the Nigerian economy, and of course also create jobs. Yeah, so it's very important. And the APC candidate was also talking about that. I also want to mention that both of them, the two programs I've seen so far, in the area of commodities, talked about using commodity exchanges to grow agriculture. Bola Ahmed Tinubu was talking about establishing commodity exchange boards. Although I have my reservation there, rather than do boards, okay, it's better we put in place the environment that will encourage more exchanges, commodity exchanges, as opposed to going back to the commodity boards that we used to have. Atiku Abubakar was very clear. Atiku Abubakar talked about orderly privatization of the Nigerian Commodity Exchange. Of course, I understand even the process is on. The central bank at the moment is managing the Nigerian Commodity Exchange. The Atiku Abubakar talked about outrightly privatizing it, and also creating or encouraging the establishment of commodity merchant, companies. So I think that is good. That is more private sector like than the commodity boards. Commodity boards are associated with, in those days, price fixing. But of course, when you have an exchange allows for price discovery, in line with market forces.
I want to understand why the capital market should be at the fore of the economic agendas of these candidates that eventually emerge. One of them eventually emerged the president, particularly when it has to do with liberalizing state enterprises, when it has to do with securitization that you've discussed before around some of our assets. Because if you look at Nigeria, we've not had that effectively done. Liberalizing critical key state assets. We've seen all the three candidates we've mentioned are looking at doing that. How important is the capital markets to drive this process? Because it's not just saying you want to break monopoly of government in state enterprises by liberalizing them, but leveraging the capital market.
Yes, absolutely. I agree with you. Privatization, I've always canvassed, should be done via the market. Privatization is made inclusive if it is through the market. We saw what happened in the past. As you know, the PDP candidate was in charge of privatization. Yeah. Okay. And we saw how many enterprises were privatized. A lot of them, including the discos, some of the discos, distribution companies, electricity companies, fell into wrong hands. And that is why we are having the problem we're having today. Partly why we're having the problem that is bedeviling the electricity sector today. So the best way to privatize is to do it through the markets. And that way you get a lot more people involved. That way it's a lot easier for these firms to even raise additional capital they will eventually require. So that is the approach I would expect the PDP candidate, if eventually emerges, the approach to adopt. He talked about outrightly privatizing the refineries and also ensuring that we have modular refineries, across the country, because he is targeting 2 million barrels per day production by the year 2030. Again, I also have my reservations there. The reservations in terms of the timelines he has set in some of his programs and objectives. You notice if you read that Atiku Abubakar documents, a number of them are targets, is certain by 2030. Some 2027, some 2030. I don't think we should be preoccupied with targets that exceed the tenure of the chief executive. So if he's going to be in power between 2023 and 2027, I expect that any plan, okay, that he is making or anyone is making should be a medium-term plan, because you don't know, what will happen, beyond that. You can see that is one of the issues I had with the National Development Plan. This one we are currently, we say we are currently operating. I mentioned it that time that the greatest risk to the National Development Plan 2021 to 2025 is political risk. And it's already happening. It's already happening because, look at it, even the APC candidates, Asiwaju Bola Tinubu, did not mention National Development Plan in the one I read, okay? Ordinarily, I should have expected the APC government, the APC candidate to say, to also take a few things from that plan to say that he intends to even implement that National Development Plan, since it's a plan that is being run, a plan that is formulated by the the ruling party. But again, the APC candidate didn't mention that. Rather, the document I read from the APC was talking about establishing new industrial, having a new industrial policy for Nigeria, for example, having a new agricultural policy for Nigeria, for example, having a new infrastructure plan. Why should the APC candidate be talking about new infrastructure plan, new industrial policy, new agricultural, when we already have, some of them in place? So I thought that the better thing to do would have been to leverage on those ones, see how you can improve on them, and then run with them. So if the PDP candidate is saying something else, it's understandable, but not the APC, candidate. So privatization is good. I agree that it has to be private sector led, but again, it has to be through the market. But one good thing that the two parties mentioned in terms of financing. So that's also why I feel the capital markets will be better off, because at the end of the day, it will rub off positively on the capital market. Atiku Abubakar, for example, was talking about optimizing the fiscal space through a long-term borrowing. He talked about issuing, if you look at that document, he mentioned issuing project-tied bonds, issuing sukuk, okay? That is part of the way he intends to fund infrastructure. So, and for me, that would be a clear departure from what we have now. I've always said it, we don't just have to issue bonds. The bonds must be project-tied, okay? Ramp up, for example, the issuance of sukuk, ramp up the issuance of project-type bond. We should have railway bonds, for example, if you want to do railways. So any issue we're making should be ring-fenced, such that tomorrow, we don't get the temptation of diverting such funds to recurrent recurrent spending. So I think that was made clear in the Atiku Abubakar document. That of Asiwaju Bola Ahmed Tinubu also talked about borrowing, of course, through the capital market, government funds. He said a combination of government funds, borrowing, and more importantly, PPP, that's public-private partnership. So both of them are emphasizing PPP, which I think is also in order. But from what I can see from the two, that of Atiku Abubakar is more inclined to the market than that of the APC candidates for understandable reasons. So one could say, or I could say, from my reading, that Atiku Abubakar's program is more capitalist oriented. Okay, that of Ahmed Bola Tinubu Asiwaju is more is tilted more towards, or is tilting more towards the socialist, if you like, ideology. Okay, although he talked about privatization of refineries, but again, he has also said in that document that the government will create a reserve, a petroleum reserve, a reservoir, okay, to intervene anytime we have shortfall. So as a matter of fact, from my understanding, it's not going to be completely left to the private sector. The government, through that reserve, strategic reserve, strategic petroleum reserve, will be intervening from time to time to smoothen prices. So that's what a socialist person will be looking at. Yes, you're moving towards the market, but you're also saying, just as John Maynard Keynes would say, you have to, the markets, of course, the markets are imperfect, therefore, there must be intervention. So I think the APC government is making provisions for those interventions. Of course, poverty alleviation, both of them talked about it. Yes. They talked about continuing with the school feeding programs, continuing with the conditional cash transfer. That's in terms of these social interventions. Okay, so all those, I think, will also have some impact on our markets, especially if you are alleviating poverty. For example, Atiku said he intends to create 3 million jobs. Okay, so if you are creating 3 million jobs on an annual basis, I expect that the retail investor base, for example, should increase. I also expect that the mutual fund sector should also show some improvements.
So in just 1 minute, how will this build up to the elections? How will this shape capital market activities?
If you look at what is happening now, the central bank is already trying to tighten monetary policy because of the expectation of too much liquidity in the system. Already the politicians are injecting so much liquidity in the system. We saw what happened during the primaries, and more of it will also happen, is also expected. So the inflationary pressure is likely to increase. And in order to anchor this inflationary expectation, the central bank is doing this tightening stance, monetary policy stance. And that will, of course, impact the market. We expect that in the coming weeks, I expect that the stock market may experience some downward trend as a result, and not just as a result of the high inflation rate, because as inflation rate is going, thank God now the year-to-date return is still above inflation rate of 16.82%. Year-to-date return is in excess of 23%. Okay, but as that gap narrows, you see some investors want to also sell. So the sell pressure will dominate as we go deeper into the election season. I also expect that some retail investors, especially those that are in politics, may also want to sell to be able to fund their, their campaigns. So sell pressure will dominate activities, no doubt, as we go ahead, partly on account of this increase in MPR, on account of the rising inflation. You will see some sell pressure happening. But one good thing is the fact that the companies on happily enough, the companies a lot of companies that are quoted on the exchange have good fundamentals, and so that is what will hold the market, because some people will also there'll be some bargain hunting happening, but overall, especially given the fact that domestic investors are the ones dominating transactions now, overall you will expect some sell pressure. Foreign investors will sit on the fence until the elections are over before you begin to see any real influx by the foreign investors.
Okay, thank you very much, Prof, for this very robust analysis as the build-up to election takes effect on the capital market, how it's going to be. But in the next 30 seconds, tell us about your latest book, Adding to the Literature in the Capital Market Ecosystem, the 10 Ps.
Yes.
The 10 Ps in Nigerian capital markets, yes.
If you don't mind, let me quickly make this recommendation. In the past few weeks, we have seen a lot of dollarization of the Nigerian economy by the politicians. That's also affecting the market. One way I think the central bank can tackle dollarization that's happening now is to implement a bit of currency reform by way of redenominating the Naira. This is the time to redenominate the Naira, because if you redenominate the Naira today, you reduce maybe 3 zeros, okay? That will make the Naira portable. So people will no longer be inclined to carrying dollars, because they can now also use Naira to transact. Okay. And it will also force a lot of people who have kept Naira in a lot of Naira circulating outside the banking system, over 3 trillion is circulating outside the banking system. Much of that money will now return to the banks, because when you redenominate, all of the old Naira will be required to be brought back to the central bank brought back to banks, in exchange. So people will be forced to bring out the Naira they have kept in their vaults, private homes, because that is not helping the economy. It's only when the Naira comes out, the economy will grow. So with respect to the book, I titled it The 10 Ps of the Nigerian Capital Market. The 10 Ps of Nigerian capital market is quite unique. You won't find it anywhere. That's talking about all that anybody needs to know about the markets. It's a comprehensive. People say the DG of who wrote the forward. That's talking about Malam Lamido Yuguda, who wrote the forward. Described it as a one-stop, capital market, and it has all. So it talks about the products, it talks about the players, it talks about the platforms. Okay, when we say platforms, all the exchanges, they're all described. All the products that we have today in the market, whether the traditional ones, equities, bonds, exchange traded funds, including the derivatives that we have just licensed, mutual funds, REITs, you'll find all of them there. And the players, of course, the buyers and sellers, they're there. The market operators, you'll find them all there. I've talked about the platforms. Then the practices, the processes, all the processes that are used in the market, they are well described there. Okay, the pricing, the factors that shape prices, a bit about fundamental analysis, technical analysis, you'll find them there. Then, of course, the what I call the prefects. I coined that term, you won't see it anywhere. Capital market prefects. who are the capital market prefects, the regulators? So I talked about the senior prefect, which is the Securities and Exchange Commission. I called the senior prefect, and then the other regulators, self-regulatory organizations such as the exchange reg, okay, and the other self-regulatory operators. Then I also talked about the problems of the markets. You find them there, and then the prospects of the market. There's another word I coined, which you find unique. It's called the precepts. The precepts. Capital market precepts refers to capital market laws and regulations. It's only in my book, you find all these details, and it's one book I recommend to every capital market player, and anybody interested in the capital market will find it very useful.
Look forward to reading that book and getting more insights about the capital market. Thank you very much. Yes, very interesting conversation. Thank you. And that will be all for this edition of the Market Review Show. The conversation was on mainstreaming the capital market to Nigeria's economic agenda as we build up to 2023 general elections. Our guest was Professor Uche Uwaleke, President of Capital Markets Academics in Nigeria. If you want to get more in terms of your suggestions, questions, or comments around this conversation, send them to Ottoabasi Abasiekong at Uche.co. Also, follow our social media platforms that are displayed on the screen. And you can also log on to the website like we said earlier. We have a website, www.uche.co, to get our latest news, articles, stories, and reports on the capital markets. Don't forget that you can engage us continually through our platforms, and that you need to be informed to make the right investment decisions. Thank you for watching, and keep discussing the financial and capital markets because they create wealth and economic opportunities.